In 1945, while Europe was counting its dead and clearing rubble from bombed-out cities, Switzerland posted a budget surplus. In 2008, when Lehman Brothers collapsed and global markets lost $16 trillion in value, Switzerland's unemployment rate barely moved. In 2020, while entire economies shut down and central banks printed money like it was going out of style, the Swiss franc got stronger. There's a country that doesn't just survive financial crises, it profits from them. And the system that makes this possible isn't an accident, it's architecture. This is the story of how Switzerland turned neutrality into the most profitable business model in modern history. Let's start with a number that doesn't make sense. Switzerland has 8.5 million people, fewer than New York City, no oil, no coastline, surrounded by larger, more powerful neighbors, and yet its GDP per capita is higher than almost anywhere on Earth. $93,000 per person, more than the United States, more than Germany, more than Singapore. But here's what's strange, Switzerland doesn't produce that much. It doesn't manufacture at scale like Germany. It doesn't innovate like Silicon Valley. It doesn't have natural resources like Norway. What it does have is other people's money, and that's not a metaphor. Right now, Swiss banks manage approximately $2.5 trillion in offshore wealth. That's not Swiss money. That's everyone else's money parked in Switzerland, because Switzerland has spent the last century building the world's most trusted vault. But trust isn't magic. Trust is policy, and Switzerland's policies are very, very specific. Let's go back to 1934. The Swiss Banking Act passes. Article 47 makes it a criminal offense for any bank employee to reveal client information. Not a civil violation, a crime. You could go to prison for telling anyone who owns what. This wasn't about privacy in the noble sense. This was about competitive advantage. Because in 1934, the world was unstable. Fascism was rising. Wealth was being seized. Jewish families in Germany were losing everything. Political dissidents across Europe needed to hide their assets or lose them. Switzerland said, "Bring your money here, and we won't tell anyone it exists." And the money came. It never stopped coming. Through World War II, through the Cold War, through every financial crisis, revolution, coup, and collapse since. Because Switzerland had built something no other country could replicate. A legal system where secrecy was guaranteed by law and neutrality was guaranteed by geography. They didn't pick sides, and that meant everyone could use them. Now here's where it gets clever. Swiss banks didn't just hold money, they managed it, invested it, moved it, and every time money moved, there was a fee. Every time wealth was managed, there was a commission. Wealth management became Switzerland's primary export, but there's a second layer. Switzerland also became the world's safest currency. The Swiss National Bank, Switzerland's central bank, doesn't answer to politicians the way most central banks do. It's partially publicly owned, but it operates with near total independence. And its mandate is simple: protect the value of the franc. Not growth, not employment, stability. So while other countries printed money to fight recessions, Switzerland held the line. While other currencies inflated, the franc stayed strong. And every time there was a crisis anywhere in the world, investors didn't ask what was safe. They knew what was safe. They bought francs. This created a feedback loop. The more unstable the world became, the stronger Switzerland's currency got. The stronger the currency, the more wealth flowed in. The more wealth flowed in, the richer Switzerland became. Crises weren't threats. They were customer acquisition events. But there's a problem with being the world's safest asset. When everyone buys your currency during a crisis, your currency gets too strong, and a strong currency makes your exports expensive. Swiss watches, Swiss chocolate, Swiss machinery, all of it becomes harder to sell abroad when the franc is expensive. So in 2011, the Swiss National Bank did something almost no central bank had ever done. They capped their own currency. They announced that the franc would not be allowed to strengthen beyond a certain level against the euro. And to enforce that, they would print unlimited francs and use them to buy foreign currency. Euros, dollars, yen. Anything to keep the franc from getting too strong. This is the quiet irony of Switzerland. A country famous for not printing money, prints massive amounts of money to stay competitive. The Swiss National Bank's balance sheet exploded. They now hold over $900 billion in foreign currency reserves. That's more than $100,000 per Swiss citizen sitting in foreign assets. And those assets generate returns, interest, dividends, capital gains, money that flows back into Switzerland without Switzerland having to produce anything. It's financial alchemy. Now let's talk about what this actually means. Switzerland isn't rich because it works harder. It's rich because it built a system where global instability becomes Swiss profit. Every war, every recession, every political collapse sends capital fleeing towards safety. And safety has an address: Zurich, Geneva, Basel. The Swiss don't need to win, they just need everyone else to keep losing. But this system has a darker side. For decades, Swiss banks helped dictators hide stolen wealth. They helped tax evaders move money across borders. They held Nazi gold during World War II and didn't ask questions. When international pressure finally forced Switzerland to loosen its banking secrecy laws in recent years, it wasn't because Switzerland wanted to, it was because the rest of the world threatened to cut them off. Even now, secrecy hasn't disappeared. It's just moved. Trusts, foundations, shell companies, the architecture adapted because the business model is too profitable to abandon. Here's the uncomfortable truth. Switzerland's wealth isn't neutral. It's a direct function of global inequality and instability. The more unequal the world becomes, the more wealth concentrates at the top. The more unstable the world becomes, the more that concentrated wealth seeks shelter. And Switzerland is the shelter. It's not that Switzerland caused the problems, it's that Switzerland profits from them. And because it profits from them, it has no incentive to solve them. This is the logic of the system. Stability for Switzerland depends on instability everywhere else. So what happens if the world actually stabilizes? If wealth inequality decreases, if tax havens close, if global cooperation improves and capital flows become transparent? Does Switzerland's model collapse? Maybe. But here's the thing, that world isn't coming anytime soon. Wealth is more concentrated now than it was a decade ago. Political instability is rising, not falling. And every time someone talks about taxing the rich or closing loopholes, the rich move their money somewhere safer. Switzerland has been betting on human nature for 100 years, and human nature keeps proving them right. The Swiss franc is still one of the strongest currencies on earth. Swiss banks still manage trillions. Switzerland still has almost no unemployment, low debt, and a budget surplus. All while the rest of the world borrows, prints, and spends just to stay afloat. Switzerland doesn't need to grow. It just needs to wait. Because sooner or later, there will be another crisis, another panic, another flood of capital looking for safe ground. And when that happens, Switzerland will be right where it's always been. Neutral, stable, ready. The question isn't whether Switzerland will stay rich. The question is whether the rest of us are okay with how.